Welcome to NorthStar. Cooper Company's management team is preparing a cash budget for the coming quarter. The following budgeted information is under review. January, February and March details for revenue, inventory purchases and other expenses are given. The company expects to collect 40% of its monthly sales in the month of sale and 60% in the following month. Means whatever is sold in January, 40% of that sales will be collected in the month of January and remaining 60% shall be collected in the month of February. Further, it says 50% of the inventory purchases are paid in the month of purchase and balance 50% in the following month. Means January purchase 50% will be paid in January and remaining 50% shall be paid in the month of February. All payments for other expenses are made in the month incurred. Cooper forecast the following account balance at the beginning of the quarter. Cash balance is given, accounts receivable and accounts payable is given. Given the above information, the projected change in cash during the coming quarter will be. Question is easy but it is little lengthy. Let's calculate one by one. First, January, February and March. We are going to first calculate the receipts. Revenue. We have sold for 700,000 in the month of January, 800,000 in the month of February and 500,000 in the month of March. Out of these sales, 40% will be collected in the same month. So 40% will be collected in the month of sale and the balance 60% shall be collected 1 month later. Means January sales will be collected in the month of February. So in calculator 40% or 0.4 into 700,000 we get $280,000. Second, 800,000, $320,000, 500,000 we get 200,000. This balance 60% from the January sales will be collected in the month of February. So 0.6 into 700,000. So 0.6 into 700,000, but the amount will be coming in the month of February, 420,000. Similarly, 800,000, 0.6 into 800,000, $480,000 that will be collected in the month of March. Now in January month, last December month will be collected in the January month. How much? The balance 60% portion, and that balance 60% portion is given here, which says beginning of the quarter. How much was the accounts receivable? 300,000. This must be balance 60% portion of the December month sales. Why? Because whatever you must have sold in the month of December, 40% must have been collected in the month of December itself. So the balance 60% must be balance accounts receivable. That will be collected in the month of January. This is very important. So how much is the total collection? So please draw a line so that you don't land up adding this. So my total receipts for the January month is 280,000 plus 300,000, $580,000. For the month of February, 320,000 plus 420,000, $740,000. And last one, 200,000 plus 480,000, we have $680,000. These are the total receipts for each of these months. Now let's leave some line and we will calculate for the payments. Payments. So we have done our purchases. First one, inventory purchases. When we have done, so we have done in the month of January, February and March. So January, February and March. How much? 350,000, 425,000 and another 225,000. Here 50% will be paid in that month and the balance 50% shall be paid in the next month. Alright, so this is quite simple. So first January month, 350,000 multiplied by 0.5, or shortcut is 0.5 multiplied by 350,000. So 0.5 into 425,000, 212,000. Last one 225,000. So 112,500. This is basically 50% is January month. Whatever we have purchased, 50% we will pay in the month of January only. February month, whatever we have purchased, 50% will pay in the month of February. March month, whatever we have purchased, 50% will pay in the month of March itself. And what will happen to the balance 50%? Balance 50% will be paid in the next month. So January 50% we have paid in January, and January balance 50% we will pay in the month of February. Similarly, February 50% we have paid in the month of February, and the balance 50% will pay in the month of March. How much? 212,500. All right, 212,000 here, 500 is missing. 212,500. Next, what about this amount? What about this amount? So January month, December month purchases, whatever we would have done, 50% must have already been paid in the month of December, and balance 50% will be paid in the month of, yes, January. So let's go back and check out how much was the balance. 500,000. This 500,000 must have been paid in the month of January. All right. So how much is our total payments? 175,000 plus 500,000. 675,000. Here it would be, please don't land up adding the first line. So let's draw a line. 212,500 plus 175,000. 387,500. Last one, 112,500 plus 212,500, we get 325,000. Is that all that we have to make payments for? Answer is no. We also have to make payments for other expenses. So other expenses. In case of other expenses, it is mentioned in the question that other expenses are paid in that month itself. So how much is the other expenses? January, 150,000. And when is it paid? In the month of January only. So we can write directly 150,000, 175,000, and last one is also 175,000. So 675,000 plus 150,000, we get $825,000. Next, 387,500 plus 175,000, we get 562,500. Last one, 325,000 plus 175,000, we get 500,000. So how much is our total payments? Total payments is 825,000 plus 562,500 plus 500,000. If we do sum of it, we have the total payments of 1,887,500. These are our total payments. Now, if you want to show it separately month wise, we can show it, or we can show it as quarter wise also, because question has not asked us for any particular month. So we can show all this information quarter wise. So how much is the total receipts that we have? 580,000 plus 740,000 plus 680,000. We have the total receipts of 2 million. Total receipts. Add how much was the opening cash balance? 100,000. So our total cash balance is $2,100,000. And what is the total payments that we have? Total payments is 1,887,500. These are our total payments. So if you see here, 2,100,000 minus 1,887,500, you get 212,500. And you will see this is not there in the options. It is not there in the option. Why? Because there is one very important word in the option. It says projected change in the cash. It says projected change. Projected change means how much more change has happened during the current quarter. Has it increased? If it has increased, by how much? That by how much has to be mentioned, not increased to how much. Remember, if 212,500 was given in the option, most of us would go wrong. So here the question says projected change. It does not say projected balance. Alright, so projected change means you should not have considered this number. But since we have considered, we will subtract less opening cash balance. How much is the opening cash balance? $100,000. So now we will get the change in the cash balance. Projected change would be $112,500. So the correct answer would be option C, $112,500. Thank you.